Testing 1, 2, and 3. Good morning, SMF MMTs. 7:38 a.m. Pacific Standard Time, 9/17/2011. What a great day. It was a triple witch week in the options market, which was a beautiful market in both long and put cycles early in the week. The bottom-up process in tech stocks were burning. And this is the NASDAQ-100 right here. Okay. Yes, it is a weekly chart. Okay. So let's make sure that you see that. But let's take a look at this whole calendar 2011 yearly low that was put in right here, and what this was all about and how we went through this step by step. And you can see how the bottom up, sell down, bottom up, gap up, sell down. So within this chop area of the weekly, so each one of these are 5 days, and they're weighted with price action. And how is anyone going to look at a standard chart and say, okay, well, that's doing that and this is that? That's the public model. Yes, we do have a directional breakout that we would be looking for, how the people would start to change their sentiment about the actual markets. And what do I mean? Because you see, when you broke below these weekly moving averages here, and the 10-week of the blue line and the 20-week there, and you started traveling below it, you could see where the public was selling hard right in here. And this was a huge down week, and this one right here, as part of the bottoming process, was much greater than the two positive days. It was a major struggle, but we were going bottom up, and the MMT platform, when we did not break below half bars, and they did actually become reality at the half bar price action support level, ascending breakout up, we went up, we tested these weekly moving averages, and they got slammed right back down. But guess what? See this line right here? That's 100 week in the current cycle. So what they have done here is, what the amount of that higher price level on the first time to test that 10-week moving average, slammed that back down. But here, that week, the minute that we started to clear this part on the NASDAQ-100, that meant all of these tops right here, right through this breakout, where this trend line is, right here. Okay, that's where this low is over here as well. However, what you really want to be mindful of is the type of green bar up, because it's a counter volatility upside move weekly, triple witch expiration period. Now look at the same distance down here in price action that was weighted to the short side of the market. That's a counter volatility one to this. Okay, there will have to be another fat breakout bar. There will have to be closing weekly support levels, such as the 10-week. The 10-week would have to flatten out and start to turn up mathematically. The high frequency volume computing machines that are in the market will be also making their high frequency entries and exits based on the actual turning cycle, because remember, standard technical analysis was written as the benchmark. However, the SMF market maker model has a different way of getting in there, and what do is that we get weighted between the buyer and the seller. And what was the buyer and seller doing, and what sectors were the buyer and sellers buying up? And why have fund managers been underperforming the market? And everybody thought they were going to get the growth of 3.5% at year end. No, they're not. And they were wrong. They came out publicly in your media and said, hey, we were wrong, it's quite weaker than anticipated, and all this and that. But it doesn't matter. The people were heavily invested going into 2011, and here we are, September 17th now. And this is a counter trend in the NASDAQ-100. This is a 52-week low calendar 2011. Naturally, we'll have this archived. On the way up, what the public is going to look for is that you can come up and test the highs. It is possible. But all the higher, the sectors that were really participating in this weekly move, it's a NASDAQ 100. So there are various different kinds of stocks that are included, like Apple and Google and all the great names that were breaking out. And here's the NASDAQ 100. These are the stocks in alphabetical order to this index that we're reviewing. You'll know that semiconductors, you'll know that various different sector leadership was contributing to the breakouts overall. Qualcomm is good. SanDisk has been acting nice. Priceline's been really acting great. You have various other ones in here. Win has been acting great. So there are quite a few stocks in here. Netflix, Google's really acted great. Look at it right here. And you can see that the 52-week low was down there where we were buying it at 473. And this current low was 543, 546 on the day. It's been building a base. ISRG's been acting great. Great market maker stock. Joy Global. Well, there's a growth cycle problem that people are looking at around the world. As right now, what they're doing around the world is they're having these big meetings, and you have Mr. Geithner over there in Poland right now on today's date of 9/17 of 2011. The thing that these worldwide bankers have gotten themselves into a problem. And naturally, SMF's opinions are solely, we don't take sides one way or the other. We just weight the evidence and our finding facts and conclusion reports that we do, kind of like we're doing here right now with the NASDAQ 100. And what were the greatest movers in the NASDAQ 100? Well, Priceline moved it. NVIDIA acted well. NVIDIA is the one that started it all out, actually, believe it or not. And because they said, forward looking, that they see their business model in their new market that they're doing with their, with smartphones, cell phones, whatever case is in the technology area, that they're going to see some growth there. Well, they can and will only for one reason, is because when technology changes, it changes, and people have to move forward with it. So there are some good names in here, but that's what started part of this last 5-day rally. And SanDisk, well, people are looking at the seasonality when certain names in certain sectors perform. And, our businesses upgrading, in different sectors, what are inventories like, all kinds of things in this upcoming earnings report. So these are your stocks. Baidu is a great one, and so is Biogen. It's got a good trading range. And the thing about it is, there are other ones that are in here at times that are very good. eBay's been acting extremely nice lately. Okay, people are liking that PayPal story, that's for sure. That's this little. eBay used to trade like Apple and Google back in the earlier part of the decade, in the 90s and the early 2000s. Green Mountain Coffee's been acting very, very, very nice, and we'd be looking at those. Not only that, there's a couple others in here that we'll be looking for, and we will stay pinpointed on the Priceline trade. That's just a nice one here. What great movements it had in that 5-day, and it also contributed to this big 5-day breakout. All of these names that are in here, yes, that's part of that NASDAQ 100 breakout, because that's the stocks in it. So we can tell where people were going to buy and what sectors that they come from. And why is it important to understand a major catalyst in the earnings season that is within days away, weeks away? It's going to start. Kickoff will be, I believe, October 11th, but don't quote me on that 100%. but somewhere right there in that neighborhood. And what's going to take place is, how are CEOs and people that run these companies, how are they going to forecast forward looking? So think about what their conference calls are going to be like. But most importantly is, what is going to be their forward looking forecast? And, you know, how are they weighted within whatever they do? So if they're a chip company, like an Intel, what do they have to say? And if it's retail, what do they have to say? But most importantly will be is there a contraction in international earnings? Meaning that U.S. publicly traded companies have done a great job of putting bottom line profits and top line profits on the balance sheet. And they've executed well, but what happens with Italy? Or what happens with all of that over there? Does that slow down CapEx spending from those regions in the world? You know, and what's that going to look like? And how are they going to forecast that? So it's very important to understand that price action volatility is price action volatility. That's a mechanical thing about the market, and that's what this great up move was. They ran that stuff right up through these weekly moving averages with a vengeance, with support at the 100-week, and the underperforming hedge fund managers and fund managers and everyone alike in those different kinds of communities have underperformed. And part of underperformance is where the risk on trade comes in. That's when risk increases, and you'll start to see more of a buy and sell transaction in the very shorter term. So we have a 5-day breakout. So next week, what we're going to have to see is how the weighted breakout from here in the last 4 weeks, that's just 5 days, 10 days, 15 days, 20 days. And what were the major signals, and what were stocks doing at times? And the reversal volatility was still in the tape, but at the same time, the fear indicators had gone back up toward their highs, and we have reversed on that VIX, the fear indicator to the S&P 500, and the VXN, which is the opposite side of the NASDAQ-100 as far as price action fear volatility. Here is the VXN, NASDAQ-100 Volatility Index. What's very nice and pleasant about it is that it is basically a public model for people to look at, and it has its meanings and its purposes. It has its analysis to buyers and sellers' fear. And what is it weighted to? Well, it's weighted to this weekly chart of the NASDAQ-100. You can clearly see that when the fear came straight down, you came straight up here, and we came straight down here. And on an intraday, 5-day, compounded price action level where the markets are working, this is to be looked at on a daily level and a 60-minute level daily. Because what happens is, as this top was being put in here, this bottom over here was getting put in. Okay, so when you look at this carefully, MMTs, here, let's take a look at the 3-week top in the fear indicator within the volatility, straight down, straight up. The public can't handle that. We know it. And then straight back down. But we were short because that was the reversal back to the line. And it never broke the line here. Never did. But now we're about to test the 200-week. That's that green line. And there's the rising 10-week on it. But that's just a standard reading. So what? The thing about it is that as we go lower, people are putting the risk on trade, and they're going to be chasing performance at year end and being weighted with the price action between the buyers and the sellers, and going into the earnings season and understanding how to build positions out, Maybe there will be some positions that need to be built out because of fundamentals, and business models are going to start to change or contract. So therefore, estimates need to come down. Not saying that it's doom and gloom, but there's a lot of things going on in the world that could stop some of the bottom line profits on the balance sheets of the S&P 500 earnings internationally. Will be weighted as to what countries are producing and which ones aren't, and we do that with each individual country and each individual government agencies, how they work in their countries versus U.S. So that way we constantly are in review status of what those countries are doing and what they supply to the actual earnings to U.S. corporations. And it's very important to understand that you have to learn how to get weighted as far as the broader picture. The short-term picture, hey, it's about making a market, and that's what the school's about, MMTs. But once again, you can see here in the volatility, the fear, that fear had dropped here on a weekly level. And this was back when we were going long the market in August. And then we popped back up here, right here. But we did not continue to blow off the fear, and that's how this bottom reversal started here, and then the breakout followed, and then this slam down right here and testing a major area that has to be weighted. The public fear model must be weighted in here, okay, relative to how the forward-looking week, which will start on Monday, and that would be 9/19 of 2011, and that as we progressively go through the timestamp in September from the gruesome selling to the bull in August of 2011, when we were short that market, you can find that at stockmarketfunding.com under index analysis. It was all done live, just like this is. It's all there. And take the time and go back and take a look at what we're saying. And here's what we're saying again, MMTs, the new apprenticeships, is that when an intraday level, on a intraday level, when the fear is shooting straight down, stocks are going to shoot straight up. And they do. And so basically you're testing some key, technically this is going to go down on the record book as of the end of the week, is that the trend is changing, and it did change right here, because at least you had that weekly breakout right here that was equivalent to this sell over here within this calendar 2011 structure low. And the main thing is, how do I know how to trade bear market, high volatility, 52-week lows? And how are those lows within the price action in a 5-day period weighted between the buyers and the sellers on that compounded level, so that you know how to get that entry either to the upside volatility or to the downside volatility? It doesn't matter. That is the only thing that matters. All the headlines and all of that stuff, just throw them out. They're irrelevant. What's relevant is where the weighting between the buyer and the seller and how this was accumulated here. And it has. And this is the first weekly breakout of this bear bottom 52-week calendar 2011 yearly low right here. And SMF, Stock Market Funding Apprenticeship trainees, they're in the school. You went through it. Shorting it down was great. popping it off the bottom was great. Shorting them gaps on equities and these sell wicks, weekly sell wicks down. The public right here was still in a thing. Now the risk on trade, the performance chasers, and everybody's in this weekly move. And I'm going to conclude the fact that there has to be a continuing breakout, and we could continue this breakout, but as we get closer to calendar September, the end of the month, the earnings, we're going to be looking for warning seasons as well, MMTs. As far as the stocks that are in this NASDAQ 100, we're going to have to get our percentage sheets out for this coming quarter and see. There's 100 of them in here, but out of the 100 of them that are here, how many of them died down lower during the calendar October 2011 earnings? I'm going to conclude this. Right now, it's going down like this. You are closing above this moving average right here. 10 week at 22.36 publicly. The 10 week flattens out. It will take 4 consecutive closing weeks above the 10 week moving average to say that the bear trend would be over with. We will be using the SMF trend analyzer for the NASDAQ 100.